Let's bring in Lazard, CEO of Financial Advisory and former OMB director under President Obama, Peter Orszag. Not sure how much of the interview you saw, Peter, but just wondering how much deja vu you're having.
A little too much, unfortunately. We've been through this too many times.
So what do you make of the Republican and House Speaker McCarthy's argument that this is the time to deal with spending? I mean, I pushed him and said, look, there's an appropriations committee and a budget where you could do this. But he said, no, they go back to that credit card analogy, right? And raising the limit on your kid's credit card.
Well, I think the analogy isn't right. And I think your question was exactly the right one, which is there's a process for dealing with appropriations for the discretionary part of the budget. And we could deal with that through the normal process. There's no reason to continue to drive a car at high speed, into a potential brick wall and brake right before right before hitting it, which is what we do over and over again on the debt limit. I'd also just note, having read his speech and I tried to glance at the transcript of the interview, it's not clear what's even on the table. So, for example, there was a mention of capping discretionary spending, but is that capping defense spending in addition to non-defense spending? Sort of what is it? And so I think even in terms of an actual proposal, let alone this not being the right format for it, not entirely clear what we're talking about. And this is particularly dangerous now because unlike previous rounds of this game, and it's a dangerous game, there have been concerns over the past few years about liquidity in the Treasury market, which is lower than in the past. So that's a market where you don't want to be playing games. We never wanted to play games in the past, but all the more so today.
It's also not clear that he has the support of his party for whatever it is that he's proposing, which he said, I'll have the support of America when I asked if he has the support of his party. So where does this go? What are you advising your clients to do? This is going to be an issue, right, for the credit market, for financing, for the economy?
Well, look, I think this is a moment of high volatility for the next few months. We've been signaling this as a concern for a while. I would note, I think even on CNBC, I had pointed out that we really should have taken care of this problem during the lame duck last year when the Democrats controlled both houses of Congress, but we're past that. And this is just an added source of uncertainty and volatility for the economy, in addition to a potential credit crunch coming from tension and fissures in the banking system and other concerns, all of which then feeds into, I think, an argument that, frankly, the Fed has moved too quickly on raising rates and it should move very cautiously moving forward, given these very significant risks that are out there through, basically the end of the summer.
Right. Does that mean you think a pause right here is appropriate, or can they sort of lean on the idea that we are going to do what we said we were going to do and do one more 25?
I would pause right now. I would have actually paused on the last raise, too. I still think that there's a fair amount of disinflation that is coming from the end of the pandemic that is underappreciated, both on supply chains, which have now normalized, but their impact on inflation takes a while to play through. And then also, we don't yet know what the full impact is, not only from this debt limit question, but also from the reverberations of a potential credit crunch, which can then play into concerns in commercial real estate.